Andrew Malcolm here, Mortgage HQ, and today we're talking about how inflation is a mortgage holder's dream outcome. Now, the positive aspects of inflation are often overlooked when we hear all the negative stuff about inflation in the media. Now, if you've got a mortgage and you've got properties already, what inflation is actually doing is eroding away your debt. So let's say you've got $1 million property with $800,000 of mortgage now. If you have 5 years of high inflation, the debt is not going to get any bigger. The property price is going to get pushed up. You might be in a situation with 5 to 10 years of high inflation that your property goes from 1 million of value to 3 million of value, but your debt doesn't get any bigger. So the proportional ownership of your property is increasing because of that high inflation, and that real cost of your debt is going down. Side note, make sure you can afford that debt, but having the debt when inflation kicks in is actually an advantage. Now, inflation pulls rent up along with it, so hopefully your cash flow can still stay strong if interest rates are going up along with high inflation. But property is a store of wealth, and it helps when you own property in a high inflationary time. It helps hedge you against your wealth going backwards. So inflation, as long as you can afford the debt, is actually a really positive thing if you already have a mortgage and if you already own property. Now, inflation obviously brings around bad things. Can lead to higher unemployment. Obviously, we're hearing a lot about the higher cost of living at the moment, and then what that does is it's spreading the wealth gap even more. And in New Zealand, starting to get to a stage where we're going to see more strike actions, more unrest, more unionization of workforce, because there's a lot of competition for labor at the moment, and because of the increased cost of living, the wages have to come along with it. Otherwise, people are not earning proportionally as much money. So if you are earning income at the moment that is well below your industry average or lower than what you could be, if you're not getting that income boost from your current workplace, take a look at the job ads at the moment. You'll find that you probably can get quite a big boost by shifting. Now, whilst inflation is good if you already own property and you already have a mortgage, if you don't, then what you're going to be faced with is now a decision. Should you still be buying property in a high inflationary time? Now, we want to step back from that question and say, what are your alternatives? You can do nothing. You're obviously not going to make money if you do nothing. You can buy cash, bonds, stocks, crypto, but none of those have any leverage, and they're not going to have high returns. Crypto is a big question mark at the moment. Maybe you got special insights that other people don't have around that, but during a high inflationary time, this is when you can start doing more creative deals. It's when the property market is feeling the pinch and there's less transactions, there's less interest, the price, understanding what the market price for something is less known. And this is when you can start doing deals with vendor finance. You can do deals with long settlement. You can do deals that include different kinds of chattels, or so what you really want to do is start learning about how to do creative deals. You want to look at Bigger Pockets and other property YouTube and podcast options, and start learning about what creative deals are, so you can get more bang for your buck. So that if you're sitting on the fence of whether you should buy a property or not, that might help tip the scales in your favor, and you can focus on educating yourself on successful property investing. You don't want to miss out in 10 years or even 5 years time of this high inflationary time of not owning property, because property prices are going to be a lot more in 5 or 10 years time, especially if we're in a high inflationary time. And it's very hard to grow your wealth if you don't own property in the New Zealand market unless you're investing and growing your own business. So if you're in your own business, there's exception, but if you're just earning a salary, then often your income is going to lag behind inflation. It's going to be hard for you to keep up. So you've got to be doing big investments, and it's actually a perfect time in an inflationary time to buy more properties, with the caveat being you've got to make sure you can afford that cash flow. And one suggestion on these creative deals might be that you can agree on a price and settle in 6 to 12 months time with some vendor finance, which means the seller is giving you some money in the deal. And it might be that if for the first year of ownership that in that interim time you're collecting rent, or you're able to take possession early, or it might be that if the seller's financing it for you, that you only have to pay principal and interest after 3 or 4 years. There's lots of options. You need to start thinking and learning about creative deals if you can't yet buy your own property. And instead of being negative about inflation, start realizing the positives for people that already have debt. If you don't have debt, then you need to get it for a good property mortgage debt. And if the market goes down 10, 20, 30%, it doesn't matter unless you have to sell, because it will recover. Any questions, let us know, and hit subscribe.